The economy overall accelerated on the quarter, which is the good news, and retail sales a little bit better. But what is worrying, at least if you look into the sort of the future, is that property construction is starting to pull back. Now, property construction had been the main pillar of the Chinese recovery over the past year. And if that engine is starting to sputter, then that would suggest that the overall economy might actually slow down. And that's perhaps why you saw the authorities go a little bit tiptoeing towards an easing here, not full easing, but certainly nudging in that direction with a triple R cut last week.
Right, that was going to bring me to my next point, because there was a lot of talk when we got the triple R cut that perhaps it was preemptive for down the road into the second half. But you're suggesting that authorities are perhaps thinking, you know what, the economy's coming off the boil a little bit, we need to act now.
It is coming off the boil. Most indicators suggest that we might get a further deceleration second half of the year, property construction being one of the key areas here, but exports too could actually start to weaken into year end. So the triple R cut is probably defensive in nature. And what we mean by this is that there's a risk here of rising non-performing loans as the economy slows down. You want to help protect the banking sector by reducing funding costs, but it does not signal necessarily that the authorities are willing to hit the gas here on the policy on stimulus and reflate the economy. In fact, credit growth continues to sort of gradually ease, and that's probably a better indicator as to the overall policy stance rather than the liquidity adjustments that they do via triple R cuts or MLFs that they just adjusted today.
Okay, Frederic, really interesting point you make there. The liquidity adjustment caught some off guard last week. Of course, that comes into effect today. But why don't you think that the data today justifies an additional loosening of policy support in China?
Well, it wasn't all week, right? So you had something there for everybody. The economy accelerated quarter on quarter. There's just probably the more relevant measure to look at, which is positive. You had retail sales actually beating expectations. And remember that happened despite a sort of a mini lockdown in Guangdong province in the month of June that should have pulled down the data. But despite that, actually, things were humming along quite well. But if we look at the housing market, housing construction in particular, that's likely to weaken. Exports will likely weaken over the coming quarters. And so that's where you want to get a little bit of adjustment in at this point without really changing the overall picture. You want to fine tune things. And the Chinese are very good at fine tuning. They don't go all guns blazing at this point, but just adjust it enough to help certain sectors of the economy, but not send a signal of a reflation, because guess what? That would just send the real estate market another leg up, and it's the last thing we want at this point.